Yo, 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 guys, what's good? What's good? Hey guys, before we get the call started here in about 3 minutes, I want you guys to do me a favor. Share this link with those who may benefit from watching, from tuning in, those who may be interested in trading news, those who are interested in learning more about Forex, learning more about these concepts. Okay, I want to create a large community here of individuals, of self-sufficient traders that understand the market, understand that like this information is priceless, right? And shout out to all of you who tune in week after week to Technical Tuesdays. So do me a favor and share this link with all the chats that you have, that you know about Forex, that allow the sharing. Share all of that. We'll start here in about like 2 minutes. Give it about 2 more minutes and we'll get started. Yo, what's good? What's good, everyone? Welcome. Give me 1 second. Let me adjust the volume on the music. Make sure it's not too loud. Cool. Awesome. Sweet, guys. welcome to another Technical Tuesday here at the Inner Wealth YouTube channel. And guys, man, what a week we've had so far. Not really surprised that it's been really still, but last week we had a really good week in the markets. A lot of liquidity being built up all across the board. 1 sec. A lot of liquidity being built up all across the board. So give me 1 second. Okay, sorry, something was going off. All right. So a lot of liquidity being built up all across the board, and really I haven't really participated much in the past few days. I've been really just watching the market, seeing what the market is offering. I mean, we traded into the scab, traded down, swept 2 previous monthly highs, 3, created a double top. You know, we have this liquidity to the downside. We're a lot closer to the downside than we are to the upside. So, you know, I do see the liquidity up there. I don't necessarily think that we need to hit that right now. My eyes are still going towards 100 whole level, the 108.20 whole level. That's basically the target that we've had for a while now. And so, we'll let things ride out. They will come in due time. Okay. Here on the weekly, still bearish, relatively bearish. Okay, you can see that we may be starting like a bullish accumulation. Okay, may not be taking place right now, but I like to see 1, 2, 3, one more swipe down before we go bullish. But this looks like the start of a easy. It looks like a very easy structure to be able to break to the upside. So we'll see for the rest of the week. I'm pretty stuck with the bias of the shorts towards these equal lows here, so I'll remain with that bias until a structure shows otherwise, right? Since the chat is quiet. Yeah, the chat is pretty quiet, guys. Actually, can you guys do me a favor? Can you drop some 7s in the chat and let me know that you guys can hear me and see my screen okay? I just want to make sure you guys can hear and see my screen okay. Cool. Let me also get on Twitter too and let them know that we are live. I totally forgot to hop on Twitter and share the link, but it's all good. One sec. One second. I definitely will get in the habit of doing this before I go live and before I'm on here with you guys, so I'll definitely improve on that. Okay, cool. So cool, everything sounds good. Want to say that you sound great and keep doing it, bro. Okay, cool. Let's make some noise then. Cool, awesome. You guys can hear me all right? Awesome. Cool. All right, let's get it, guys. So I'm gonna be doing a CPI outlook. You guys have seen, repetitively we continuously hit targets all the time. We've been hitting targets left and right. So if you guys don't already, make sure you're following me on Twitter. Okay, I know down here you guys can see the handle on Twitter. Make sure you follow me on Twitter, because besides YouTube and doing these weekly reviews, I will be releasing just daily analytics every single day. I may not trade every day, but I will show you guys like daily objectives, daily liquidity that I'm looking at, zones that catch my eyes. Sometimes I'll straight up tell you guys that I just need more data. You know what I mean? I'll blankly let you guys know that I won't be participating. So it's just like my trading journal, basically. Like, it's literally you guys having an access to my trading journal. With that, I believe it's every trader, especially when you're first starting out, you should be doing. Like, if you're not journaling, you're missing a lot of feedback. There's a lot of feedback that you can receive from journaling. So just an FYI. Let's see. Drop in the chat. What did you guys have? You guys taken trades this week? What have you guys taken? If you guys have taken a trade this week, what have you guys taken? Drop it in the chat. I want to see what you guys have took, because the longs, okay, Monday and Tuesday, when we took out that previous daily high here on the low, right, we built up all that liquidity to the downside here on the weekly, which is on the right, and we came in, swept Friday's low. Monday goes up, and we trade right back into that imbalance there. Okay, so we trade right back into that imbalance, into that previous daily high. And a lot of times my range is just purely based off Like, look, we need to come back to take out, that's the low, this is the high right there. That's the range right there. And so that range there is 50% and above. That's your internal liquidity. For me, we don't have to go any higher than this, but that doesn't necessarily mean like we won't. I do have this daily gap here that's marked out. We could essentially go back up there and tap into that. There's a possibility that there's a part of me that believes that is still possible. It is not necessary for this to dump to these lows, but that's basically my directional bias for CPI is a catalyst that's going to get us to the downside to these lows. Yeah, I'm pretty firm on the lows still, so we'll see what ends up happening. We're a lot closer to the lows than the highs. If we were to smack these lows and just continue moving to the downside, that'd be great. We'd maintain this bearishness on the weekly, monthly. If we were just, to tap down there and start accumulating and respecting, most of the structure to the upside, I'm going to be pretty bearish. I'm going to be pretty bullish in regards of the dollar for a while. So is this the catalyst that's going to push down all the way and create these new lows? Yeah, we'll see. CPI last time was very slow. Will price action, just create a high and then that's it? This is the areas that catch my attention. Okay, so if we shorts overall are the bias. It's just a matter of from where, right? Are we going to short from up here, deeper into this imbalance, or are we going to just short from the Asian high? Are we going to just short from London? It's a matter of where are we going to short from? Not when, but where, because I have a pretty good idea that London's going to give us a really good understanding as to where we're going to mitigate from. If we start walking to the upside, or if we remain below Asian low all the way to New York, that's really going to be what defines it for me. But if not, this thing could just dump and continue to go to the downside. Downside overall is the objective. No real evidence yet on the 1 hour. This kind of has me to believe that this is the only thing right here that makes me believe that we could still go to the upside a little bit more, is the 1 hour. The 1 hour currently looks pretty bullish, like we can push up one more time. What will we do once we hit the Asian liquidity? It will mainly depend as to when we hit it. If we hit it from here to London, likelihood is we'll take out this previous high one more time. But if this high is still standing and Asian liquidity is still standing by New York, then you have some pretty good. The likelihood is that we'll just come to Asian and then down. So I'll definitely keep in touch with you guys more tomorrow during CPI on my Twitter. The Monday came down. Remember last week I was teaching you guys the power of 3? Can you guys drop in the chat what was the power of 3? Let me check the chat as well. Was looking for longs today on Dow Jones. It's been ugly because of consolidating as expected. Yep. Haven't traded this week. That's awesome. Longs on NAS yesterday. Nice. Definitely will check it out. How do you have a daily candles on the right besides the 4 hour? How do you have the daily? Oh, okay. It's because I have an indicator. This is an indicator that I use here on the right. It's called the power of 3, right? And it just shows that I have it set up to this setting to show with higher time frame on the right. Sometimes I'm showing on, for example, like the 1 hour, this is the 4 hour. On the 4 hour, this is the daily. And then on the daily, I have the weekly. and so forth like that, because I like to keep one higher time frame eyes on always. So it's just an indicator that I paid for. It's called the Power of 3. Thanks for asking. But okay, so let's go to Monday. Monday opens, and what was I teaching you guys? The Power of 3. Okay, it's the open, manipulation to a level of liquidity or support or resistance. Well, liquidity, imbalances, order block. These are all levels of support or resistance to me. Okay, so when I say level of support and resistance, just understand it could be any of those. It doesn't rule out any of those. Okay, it could be a gap, insufficiency, liquidity, order block. It could be whatever. In this case, it's a previous daily low. Okay, we have the open. We go trade down to the previous daily low. We accumulate. Okay, so on this case, because we're anticipating some bullishness, okay, let's say you're anticipating some bullishness, you can see price action trades down, accumulates below the daily open, and then trades to the upside. Okay, and so that's how you'd play the Power of 3. Okay, and then you'd essentially be able to do that within every time frame. That's what I want to teach you guys to start seeing, is within every time frame you guys can actually see these. So we'll play with Monday's longs on DXY, and we'll see how the shorts played out across the board throughout the indices. Now, one thing I'll tell you guys is, as I always mention to you guys, is CPI, the day before CPI is not, it's like my least favorite. It's my absolute least favorite days to trade. Does that mean I'm gonna stop showing up? Absolutely not. I'm gonna show up every day regardless. But I will tell you guys, like, I was not a fan. I'm still not a fan. Nothing's changed my mind as of yet. Okay, last week we had FOMC. We had some really nice shorts opportunities, right? We shorted really nicely to the lows. We had some major divergence between NASDAQ and Dow. So right here you guys can see, we'll add NASDAQ real quick. So it's NQ for the futures. For anybody wondering, it's NQM for the June contract. And it's right here. And then we're gonna add this guy right here, but we're gonna put it in a plane underneath. Style. Hollow candles, 1 second. Pretty sure you can grab this guy and put it to the bottom. Style. Give me 1 sec, guys. I forgot how to put this at the bottom. Either way, I think my point will still be very much understood. Give me 1 sec. Okay. This is NASDAQ and this is Dow right here. The back of the indicator. Then you will see the new pane. Give me 1 second. Oh, I see. There it is. Boom. Thank you, brother. Thank you. You are a lifesaver. Okay, so I just wanted to show you guys this because I thought it was very interesting. Check out the way Dow and NASDAQ were showing divergence. Okay, so meanwhile on NASDAQ, we've been trading higher from this high. Check this out. We'll cross this over here too. Okay. From this high right here, Dow, this high, NASDAQ created a low, and Dow created a higher high. This is what started the whole divergence, okay? This is what started all of the divergence. Dow created a lower low from there, and NASDAQ created a lower low as well, okay? But then NASDAQ created a higher high, right? And Dow created that high, but then just absolutely plummeted to the downside. Took out that high. Nasdaq took out that initial high, and Nasdaq failed to create a lower low. Dow created a lower low. Okay, and so that divergence there. Oh shit. That divergence there shows you that Nasdaq has the bullish divergence. So meaning that Nasdaq it has the stronger likelihood of buying and smacking these highs, right? And Nasdaq is probably gonna smack them all higher. I mean, harder or sooner than all the other two, Dow and SPX. Dow is still chilling over here in discounted price action, right? We're still chilling over here in discounted price action. We'll go to the 4-hour right here, and as you can see, and for some reason, give me one sec. For some reason, I can't move my price. It won't let me move or toggle the price for some reason. That's weird. I've never had that happen before. Oh, there, I unlocked it somehow. Super weird. Apologies on all the disturbances. Okay, so on Monday, given that DXY was going long and we anticipated a little bit of a long price action, honestly, I wasn't a huge fan. I wanted some longs out of Dow. I wanted to see some longs out of Nasdaq. So here's where I want you guys to really understand. The way that I use DXY is to complement my Dow and Nasdaq bias. And so because I wanted to see some longs out of Dow and Nasdaq, I didn't like the way DXY was trading to the upside as well. So it didn't complement me that day. I stayed out of the markets. Those are the days that you're gonna see a lot of back and forth price action. So let's go review Monday, because both of these assets moved or were ready to go long, right? We went below the Asian low, we accumulated, and price action just kept trying and was unable to go long. So here's the open around right here. You guys can see the open took place, and all we did was tap into this imbalance and continue moving to the downside, right? We moved to the downside. We attempted some slight accumulation, but it was not strong enough to take this. Then we come for previous daily low today, okay? And now understand, on DXY yesterday, right? Or today, earlier today, yesterday, depending on what day it is, we went long. We had the open, accumulation, right? We came below the Asian low, then manipulation, right? Open, manipulation, and this one was the two of the accumulation. And so we accumulated to the upside. On Dow, we had some longs again. Price, for me, DXY needs to short for it to complement the Dow. Otherwise, we're going to keep doing this. So what we did today, we had a really nice open one more time. Check it out. At the open, we swept that previous daily low during the opening of New York. Okay, then we had the open for the New York Stock Exchange, and we just trade right down, sweep that previous low. Okay, we come right down into this imbalance, and you can see here the long throughout this imbalance here, if you would have been able to catch that retest. Okay, again, the longs were very nice, but it was this. I see. You guys are awesome. I love these lives. Okay, so anyways, That one, I personally, again, did not participate. I wanted the longs. DXY was not complimenting it. Could I have participated on this? Yes, but I've been really selective about the trades that I take right before the CPI. The day right before CPI, to me, guys, it just doesn't seem a little, too worth it. But it's really up to you. Like, if you would have, if this met your criteria, who's to tell you that this is not the trade that you take? We got that Asian high right there and that new weekly opening gap. Boom, right there. Nice 1 to 5. The risk reward was there. It just wasn't something that appealed me too much, especially around the open. So there's that trade for Dow Jones. Yeah. Will you trade CPI tomorrow again? Yeah. I will definitely. Yeah, I will definitely trade CPI again. I trade it every time. I don't know if you're referring to that slippage video, but yeah, I mean, bro, that's what trading is about. It's has its downfalls and its learning curves, but hey, that's what I signed up for. It's part of the game. It's nothing that you can avoid in that moment until you find out. And so I found out, and now I can avoid these things and be a better trader in the future. So I'm really not too concerned about CPI. I believe that I've learned a lot from previous CPIs. I've been trading news for almost a year now. For over 3 years, I avoided trading news completely. And so for almost a year now, I've been trading news, and I would say I enjoy it a lot. And I don't think so far, nothing would make me deviate away from it. I think it's pretty fun. So I'm definitely going to continue doing it. Okay, so change the okay. Wanted that one on the left without me. Yep, that left without me as well. It's all good, brother. You never miss any. I like to tell my students, you never miss anything, because what you didn't take was just never meant for you to begin with. And so if you weren't able to take it, it just wasn't meant for you to begin with. And I'd rather be with that thought than to feel like, oh, I'm missing shit, because then you're like in a state of lacking. So it's more of like, it just wasn't meant to be yours. NASDAQ. All right. How do I approach a really bullish asset? I get this question a lot. Bash, how do I go long? If I'm extremely bullish, I'm already at a higher high. We're in premium price action. How do I approach more longs in premium price action? Do I just wait until we get to discount? Well, let's look at here, okay? The answer is yes, but it's not the discount that you guys would think. So here on the 4 hour, you guys can see that our whole range is right here. We've been playing within this range for about 2 weeks now. Yeah, for about 2 weeks now. We're diving into that second week of trading within this range, and we'll see here. Here's the long idea from last week, okay? From Wednesday of last week, we had the opening price, okay, the manipulation to a level of liquidity, okay. We came for all these previous daily lows and this previous daily low there, which was 50% and below, and I mentioned that was enough internal liquidity to really turn this thing around. I don't know how many of you listened, but that Thursday was a straight up liquidity buildup. We hit a minor target on that Thursday right before NFP, and then you guys can see the longs from NFP were just, man, super textbook. I didn't trade anything for NFP, but the longs did end up playing out really nicely into those areas from that 50% and below. So now this one's where premium and discount, if you don't know how to approach it, it can bite you in the ass, okay? So our range does not change until a new level of liquidity has been achieved. And so until then, until we have two very strong structural liquidity points, we will not shift our range. And so our range currently is from this low to that high. Okay, so we're really high up in premium. Okay, and so what I do is when we're really high up in premium, and I'm not gonna just wait till price action just comes down all the way this way, because obviously like we're extremely freaking far. And if you're following premium and discount price action theory, then you would understand that, hey, like if I was to wait for discount, what discount am I waiting for? So there's two discounts in a large range. You'll see we'll divide this whole large range here. Okay, so we'll divide, this is the whole premium side of price action of this range. That's the premium right there. And so we're gonna grab this premium. Let's change this to white. We're gonna grab this premium and we're gonna split it in two. We're gonna split it in here, and this is going to be our discount, or discounted price action, and then up here will be our premium, right there. Boom. Okay, so that's our premium to discount within that premium to discount range. I know that's pretty freaking confusing, and it's might be new concepts to you guys, or to some of you. Maybe it's not new concepts to some of you, and you've seen this before. I promise you, this is nothing that you guys weren't already gonna figure out yourselves at some point. Premium to discounts ranges will sometimes, like this one, right? The whole range. So what lies 50% and below of this whole premium range? So now we can look at discount within premium. Okay, this, because we're extremely bullish, and so we see like DXY equal lows, NASDAQ relative highs. So it's just like something's cooked. These longs have been cooking. Like these longs are gonna happen. Now it's a matter of from where. That's what you have to understand. Like DXY shorts are coming from where? NASDAQ longs are coming, but from where, right? And so to add more, I guess you could say, accuracy, you could implicate this rule. Now we can get to wait till 50% and below. You can say that this right here will be more than enough. You can come up with your own intraday range. For me personally, I really like this low, this area right here. Okay, this one, it's a new week opening gap. I think we could potentially come back to it and trade back and forth, or down into it and then long from there. Honestly, it's really going to depend on what we look like at the open, but this is, I'm going to again show you guys what I'm personally looking at. Okay, another thing that really gets me attention, of course, is this right here, but first and foremost, this right here, 50%, this push up, that candle does get my attention. This whole push up, this is a, I guess, a level of an order block, a mitigation candle. If you guys have ever seen mitigation candles, like this would be the mitigation candle right here for continuation. Okay, let me see the chat. Okay, I wanted that one, but it left without me. Cool, powerful. Could you move your window to know what temporality you are using? I have no idea what that is. Temporality? Yeah, I have no idea. Could you move your window? Oh, my face. Yeah, sure. Yeah, I'll do it for a little bit. I'm not sure what. So you're looking at like you want to know what asset I'm using, right? I could just tell you, it's this is, they're all right here. It's NQM 2023. I think that's what you're looking for, but right. So you guys can see here, right? We have this area here in discount and this area here, and so that's kind of what I've been looking at. We did sweep previous daily low, so just beware that we've already taken it. We can take it one more time, because to me, like, those look like very relative lows, right? Like, they just look like very relative. So you guys can see relative lows. I want to see those poke down one more time. I will leave an alert down there. Honestly, I'm going to take all of this stuff off, so now that you guys have seen it, because I don't like that. I don't like too much stuff on my charts. So this is kind of where I'm looking first and want to see what happens there. But the ideal area with a higher probability area would be waiting for this new previous weekly opening gap. Okay, so I will be doing that myself. I will be keeping you guys up to date, of course, on Twitter. But look at these shorts for Nas right here. So here's something I will tell you guys is, like, I will put my biases either way for the day, and then, you know, I go back and say, okay, yesterday I wanted the previous daily low to get hit. It got hit. Cool. I wanted longs, but I wanted it below the previous daily low. So previous daily low got hit, and so now I'm going back. I'm revising, and I'm like, okay, look, on the 1 hour, we came back for this imbalance here. Okay, and what do I tell you guys? And look at it on the 4 hours. So you have the 1 hour here on the left, and you have the 4 hour here on the right. Okay. So you have the 1 hour here on the left, and then the 4 hour here on the right. And you guys can see that 4 hour comes up, trades back into that 4 hour imbalance. Right, we trade back into this 1 hour. But not just that, look at what we do. Okay, this is something that I want you guys to really pay attention to. Is I always tell you guys now lately, I guess not always, but now lately I've been telling you guys a lot about, give me 1 second, let me add hard time frame candles. Give me 1 sec. Okay, now I've been adding these things, but I always tell you guys, journal, right? And journal even when you're not showing up, especially when you're not showing up, but mainly find out why you're journaling. Like, find out what works for you, what doesn't. Because I noticed that what works for me is waiting till after 10 a.m. Because I noticed that 9 a.m. tends to be the liquidity. That hour of 9 a.m. to 10 a.m. tends to be a lot of liquidity. There are a lot of scalping opportunities throughout that 9 a.m. to 10 a.m. window. A lot of high probability scalping models. A lot. You can find them quite often. That's not the style that I want to go for. I identify myself as a day trader. I don't identify myself as a scalper, so I will continue to just stick to 10 a.m. and afterwards, because I feel like it's more stable environments. And so you guys can see 9 a.m. my theory about 9 a.m. Okay, here you have the 15-minute. You have 9 a.m. Okay, opens, right? We get this accumulation or a manipulation. So 9 a.m. opens right here, right? Power 3. 9 a.m. opens, manipulation, which was that 4 hour imbalance, which is that 1 hour imbalance here, right? And then 10 a.m. opens, and what do? Look, 10 a.m. opens, and right away we go into manipulation. Take out previous hourly high, which is your liquidity, which is your level of resistance into that imbalance, and just shorts off, right, into that previous daily low. It took some time. It took its sweet ass time. I wouldn't participate in it myself, but price action's there. Give me 1 second. Let me drink some water. I drink a lot of water. Stay hydrated. Okay. if you guys want to know more about this indicator, I will make a video on it this week. I get a lot of questions on it, and I didn't want to make a video on it until I knew really well how to use it. I feel really comfortable with this thing, so I will be sending you guys that here soon. Stay tuned for the video. Okay. So again, looking for shorts, right? Then on NQ, on NASDAQ, personally, here's where below these lows and into this new week opening gap. Those are the two areas where I'm going to be looking for longs, for accumulation, for evidence to continue to go to these highs right here. So you guys have targets and potential high probable areas to look at. Okay, same with Dow. We have this breaker, we have this low, we have this imbalance. We're below 50%, so we are already in discount, which again is the higher probability and ideal thing to look at. There is bearish divergence on Dow, so it may not pop off as hard, but I am looking for all of these highs into this daily imbalance here on the left. Okay, that is my overall objective, is that daily imbalance right there. I want to see some accumulations into that daily imbalance, and it can either happen from one of these places, from this breaker below the low, or from that Asian low. Depending if by London we create a new higher high, I believe the Asian low will be the what sets this off. So it just depends what London ends up doing. But those are my biases. Long on indices for CPI, we'll see what ends up playing out. And hey, maybe we go long and then we just boom, just dump, just shit across the board. Anything can happen. My targets tend to get hit on CPI. I'll tell you guys that. Does it always play out exactly how I anticipated it? Absolutely not. Usually my targets get hit like in the first few minutes, and then price does some crazy liquidity sweep and run that I'm usually not a part of, but it's, I guess, live and learn. I'm working to getting better on CPI. You guys will definitely see the growth. for sure. I caught that this morning on Abundant Capital. Took the longs on Nas. Made good stuff, bro. My trading analysis and aligning with yours, it makes sense. Makes me feel more confident. That's awesome. That's really powerful stuff. Again, guys, follow me on Twitter. I saw that. Yeah, I saw that somebody took some longs on Nas as well. So that's really cool that if you guys participated in the longs yesterday, Nas, these longs were really nasty. Coming into this, it was some longs coming into this area right here, this whole area of accumulation. I looked at this imbalance here, and really what got my attention was NASDAQ coming into that area, and then 5 minute. This market structure shift right here, right, with an imbalance, right, we come right into it. We have a breaker right here. This is a breaker. You have a breaker right here. There we go. Here, we just won't put anything here. A breaker, right? And then the imbalance. So your entry point is where these two overlap. Okay? Your entry point is where these two overlap. Stop loss below the low of the imbalance. And of course, just aiming for that previous daily high level. Right there. So we'll actually take this one off. Nice risk to reward. If you would have gone break even, maybe you got taken out. I don't know if anybody got taken out, if anybody re-entered there. I see too many people get scared away from retracements like that, including myself. And so I will tell you, focus on figuring out why. If you did get broke even, figure out why that was. You know what I mean? Because the trade is still there. The trade was very much valid, and so you want to improve those small little things, because it may work sometimes, but more often than not, if it's getting hitting you out at break even, that's something to consider, um, looking at your trade management side of things. Most people don't fail at analyzing; they usually fail at the management side of things. Caught the longs today as well. Let's go look at the longs. I believe it was on. I want to say on Dow, right? Yep. Okay. Yeah. No, we did cover those, right? So, no, beautiful guys, beautiful. Learning towards to love the retracement. Yeah. So, okay, a really good exercise. If you guys ever want to learn a really good exercise of how I got over the fear of retracements, is I have a rule on my entry. Okay, on my entry point, my rule is that I will enter while the candle's printing down for my longs. And for my shorts, okay, I will enter while price is printing upwards into my area. Right? And so what that'll do is, like, one, it'll give you a way better entry usually, instead of you going in after it did this and then you go in once price action is like already leaving. Because now you believe in the trade once it's already playing out. And so the way that I get over it is like, okay, now I'll have my areas and it may end up being a bullish candle, but the moment that you entered was when it was printing downwards. You know what I mean? The moment you entered on the long was when it was printing downwards. The moment you entered on the short, it was when it was printing upwards, if that makes sense. It's a really good exercise, for getting over your fears of retracements, and of course, like, getting way better entries without ever chasing the price. So yeah, guys, I'm gonna wrap it up right there. You know how I like to keep it real nice, short and simple, but I appreciate you guys tuning in and being here today. We'll run it up again next week, every single week after week. I want you guys to do me a favor, and I'm gonna let you guys in on a quick announcement. I am going to be doing I guess, what would you call this? A raffle? Yeah, maybe I don't know how you would even call it. Yeah, a raffle, right? Yeah, I will be doing a raffle. I'll give you guys more details on that. I will be doing a giveaway. There we go. That's what it's fucking called. Okay. I will be doing a giveaway, okay? I will be doing a giveaway this week. I'll announce it this week. It will be later on for next Technical Tuesday. I'll announce it on there. It is going to be a 2-hour one-on-one session with myself. So those go for $240 currently. I believe 210, maybe around that price. And so for that, I'm doing a giveaway for a 2-hour session with me. The session will be recorded. It will be at your time, and we'll go ahead and get down to the nitty-gritties of the market, of your trading. We'll develop, if you need trading psychology, developing a trading plan, if you need more help with liquidity, resources, whatever it may be. It will be a 2-hour session when you get to prepare your questions even prior to. So I will be doing that, guys. Announcing more of that this week and next week, so stay tuned. Make sure that you're tuning in, and I'll see you guys next week. Again, whatever you guys need, I'm here. The link is on the bio the link is on my description too. If you guys ever need to reach out for whatever reason, or if you guys need to reach one of my social medias, if you guys need to reach my DMs through Instagram, Telegram, whatever, all that resources right there. So guys, with that, I am gonna let you guys go. I want you guys to have an amazing week. Okay, remember, okay, have your weekly objectives. Look at the weekly. Okay, look at the weekly. Look where we've been chilling for 2 days. We've been chilling below the daily open. What does that tell you? What does that tell you, guys? All right, power of 3. What does that tell you? What did we go down for? Right? What did we dip down for? We already took out one previous daily low. We had that imbalance. Right? Do we have to go down any lower? What is the level of resistance that's going to create the long? This is the manipulation to a level of support. Right? You guys look. at the weekly. Journal these things. Figure out what your niche is. Figure out what your biases are. If you guys aren't doing these weekly, daily objectives, I promise you, like, these are feedback moments that you guys are missing. Okay, so with that, guys, I will let you guys go. Have an amazing rest of your week. Stay tuned for more videos this week. I will release that indicator video, and I will release another video on Friday to review the week and kind of review CPI and see where we're at, and catch up with you guys and see what happened from this call, right? I want to see what played out, what didn't, what we can reflect on, and what we can grow from. So guys, with that, take care. Have an amazing one. I've already said bye like 5 different times. Take care, all right? Peace.